on this trading Friday, August 14th, your final tale to tape, the S&P 500 underwater, let's call it 0.2%. The Dow 30 in the red fractionally. The New York Stock Exchange Composite Index, folks, another all-time high in the green, 0.05%. Hey, it still counts. And the small caps, the best of the batch, up 0.5%, now up 23% on the year. The Russell 2000 outperforming every single Magnificent 7 tech stock. I don't know how many people expected that on their bingo cards for 2026. Energy, utilities, materials, the outperformers in the S&P, and your sector laggards, tech, healthcare, and consumer discretionary. To the Dow we go. Chevron, Disney, and UNH, the big winners. A lot more on Chevron's big day and big year in just a few moments. Salesforce, Cisco, IBM, your Dow laggards. Most of the Mag 7 names underwater today. A bit of outperformance from Tesla, Amazon, the worst of the bunch. Oil prices rising a bit on the day. Treasury Secretary Scott Bessent warning of, in his words, economic isolation of Iran. We saw the airlines and the cruise lines under pressure in response in today's session. And the VIX reaching its lowest level going all the way back to December 30th of 2025. The VIX reaching its lowest level of 2026 earlier today. Let's bring in our good friend Dale Smothers, CEO and founder at RDS Wealth. My man.
What's up, JD?
Great to see you here.
Good to see you, brother.
I feel like all week the market was trying to find its identity, but you go through the numbers, you're like, there's actually a lot of shiny things to talk about. There's a lot of excitement. Right. Let's start your take more broadly on earnings season. Obviously, we're through the financials. We're through most of the mega caps.
Sure.
We get some really interesting retail names next week. On the 26th is the big dog, Jensen Huang and NVIDIA.
Right.
What do you take of what we've seen so far?
NVIDIA holds all the cards, in my opinion, and the reality is earnings have been the reason that we continue to bid higher in spite of stubborn inflation, little weaker labor market. We see earnings continue to basically bring the ladder with them as this market continues to climb the wall of worry. Earnings have been incredible this season. Again, the 7th consecutive quarter of double-digit earnings on the S&P 500. You just can't ask for anything better than that, and it's exactly why I think that the S&P 500 hits an 8,000 price point. We've been talking about that, JD, together for quite a while, even in the dips. Yeah. What we've seen is tech leads us to the next leg higher. There's a rotation out of tech into the broader market, and you've got the reinforcement troops, if you will, showing back up to basically hold the line. And what we're in the middle of right now, I think, is the next leg higher, going to be led by tech.
I wonder how you're thinking about monetary policy out of the Fed. Let's get into the fun, splashy stuff here.
Right.
We got 3 FOMC meetings left: September, October, December. Possibility of an interest rate hike on the table, at least for that last meeting.
Sure.
How do you think the Fed approaches the inflation prints we've gotten as of late?
I think the Fed is getting breathing room right now to pause. And with the Fed chair, clearly, Kevin Warsh coming in, he wants to pause. Yeah. I believe that he even wants to cut, but the data will not allow him to cut. I don't think that the data supports a rise either. I don't think we see a raise in interest rates. You know, we've got a softening labor market. It's not cold. It's certainly not hot. We'll call it the Goldilocks labor market. And then from there, you've got a very stubborn inflation number. And so this wait and see how things shake out in the inflation is probably the path they take forward. I think it's a price shock from just a supply shock altogether about oil. That has clearly bled into the inflation numbers. But until we get clarity on the oil price and Iran, that whole Middle Eastern crisis, until we get clarity there, I don't think that the Fed makes any moves for fear of making the wrong one.
I think overall discretionary spending for the consumer has been a really interesting story, and we got kind of maybe a bit of a jarring piece of data today. Retail spending, retail sales falling 0.6% for July. That's a big drop.
Big drop.
And we know the difference between the so-called hard data and the soft data, how sour far too many Americans feel about the economy, but that sets the stage for names like TJX. We'll get Target, we get Walmart, we get Home Depot next week. What are you looking for out of those names after what we learned today?
Yeah, so the thing is, the earnings that we're going to hear cover the entire quarter. So what we may hear from Walmart may still be a strong number. We may still hear a good, strong TJX. I think you've got names like Walmart, though, as a consumer becomes less capable of spending money in that higher echelon shopping center. Places like Walmart might actually be the place that benefits from that. You also saw a lower consumer sentiment this morning. If you paid attention to that number, the consumer sentiment is being jostled around from one side to the next. They're saying, hey, it's great because Iran's going to be resolved, and then the Iran deal's off, so we don't know what to think. A strong consumer is a must for us to continue this rally because earnings, again, is the reason we're up. making sure that we have those earnings to continue stronger is going to be a must. We're putting our attention to that. We're going to keep an eye on that very closely.
I don't know how closely you end up tracking kind of the world of politics, or at least where politics and the elections for the midterms kind of crosses over with the, with market activity and pricing activity. We're about 81 days out for the midterms here, and we know a lot of voters vote on the economy. How much of that storyline is on your radar as we get closer to the elections?
It's definitely on our radar, JD. Here's what we do. For our clients, we are here to manage volatility. We work primarily with retirees, those who are close to retirement, over the 59.5 threshold normally. We're moving money into IRA, being a little bit more conservative, and September historically is not a good month. September in the middle of a midterm election is historically not a good month. So midterms are definitely on our radar. We're taking some of our profits here from this maybe tech sector that's leading us higher. We're trimming some of those profits. We're putting them into a little bit safer, less volatile positions in brace for what's going to happen in the midterms. There will be volatility to come. We think 8,000 is going to happen by the end of the year, but I would not at all be surprised if we visit the low 7,000s on our way there.
Dale, come back and see us anytime you're here in New York, my man.
Always
Take good
pleasure,
care.
JD.
Nice to see you.
Yes,
Skylar,
sir.
grab
Good to
your
see you.
mic. You and I will hang out soon.